We're all familiar with that phrase, money makes the world go round, and that is especially true in the world of business because without money, things just don't seem to work. That is especially true in the world of importing, exporting, and distributing because without funds to have products manufactured, distributors are unable to carry on their business, and everything comes to a halt. And at times like that, most normal banks will tell that distributor, sorry, pal, we just can't help you. So what does a company in that kind of situation do at a time like that? Well, one such place to turn is a New York-based venture merchant banking firm known as Capstone Business Credit. It is a company that specializes in helping rapidly growing companies in just that kind of situation, and they've been doing it for 15 years. To learn more about this fund, we turn to the two managing members of the firm, John Rice and Joe Ingrassia.
We're really the only vertically integrated merchant bank out there that has the capacity not only to provide capital, but to provide the appropriate advice to help the clients grow in a measured way.
Capstone Business Credit's primary activity is to provide working capital for growing companies, primarily in the import-export business, but over the past several years we've also become more engaged with companies dealing in the United States.
Capstone is a merchant banking firm that provides growth capital to companies that are typically contract manufacturers, distributors, licensees who typically are acquiring goods offshore and delivering them to creditworthy companies onshore.
We're not necessarily importing and exporting because the same principles apply to the use of working capital to acquire goods necessary to fulfill sales, whether it's a company in New Jersey or a company, buying stuff somewhere in Shenzhen, China, and shipping it off to Seattle, Washington.
Most banks lend against assets, and in order to demonstrate you have assets, you have to show a balance sheet. Most contract manufacturers, licensees, or distributors don't have any assets. They're virtual companies. They have a great idea. They have a brand. They don't manufacture it themselves, so they don't have a big plant. They don't have a lot of inventory, but they have an order from a creditworthy account in the United States or Europe or some other country. We take that order, which is an intangible asset, and use it as collateral to pay the supplier of that merchandise or the manufacturer of that merchandise through a letter of credit or other instrument so that the goods can be delivered into the United States or whatever country they've been ordered from, and then create an asset called an accounts receivable. When you have an accounts receivable, you can pledge that at a bank, but if you have a purchase order, there's performance risk in it, and the banks won't touch it.
Milmar Food Group is a small frozen food manufacturing company. It's a family-owned business up in Goshen, New York, upstate New York, and we came to Capstone through a friend of ours to look for alternative financing. Due to restricted financing that we found in the banking arena, Capstone just wows us every time. They came up with ways to finance our equipment, our receivables, our inventory, and we enjoy working with them tremendously.
CUTVNews Corporation is based in Charleston, South Carolina, and we have 3 lines of ladies' apparel. We produce, manufacture, design, and ship all in South Carolina, but we produce our clothing all over the world. So we grew from being a very small little niche business to a large business overnight, and we needed more capital. So we ended up with $1 million in orders, but no way to get the product made or to bring it into this country. So we were introduced to Joe Ingrassia at Capstone through a friend of mine who's a merchant banker, and 6 months later we had a deal.
We had that level of experience, so we were able to then, over time, through doing really dozens and dozens of business transactions year after year, accumulate a very broad range of experience in a number from commodities like shipping wheat and grain, engine parts, jet engine parts, food products, consumer products, and gradually we just accumulated not only expertise ourselves, and that is a specialty that many financial entities don't participate in. They're not involved in offshore financing of goods that are being fabricated somewhere else, and you have to deal with customs issues and quality control issues in another country.
Where other banks said no, Capstone said yes. They've worked with us many ways to finance our purchase order. They have a product called purchase order financing, which works perfectly for us since most of our business is seasonal, where we need our business to finance our purchases prior to normal lender would finance receivables. Purchase order financing works very well in our business.
And what do you base the decision on as to whether the answer is going to be yes or no with a particular client?
We're like the community banker used to be, where you'd come in, meet the local business owner, and then make a decision as to whether or not he has good character to lend to. In addition to that, we do all sorts of background investigations on our clients to make sure that they are honest businessmen, that they don't have a lot of litigation in their past. We make sure that the profit margin, the gross margin on the goods, is at least 20 or 30%. And we want to make sure that the goods have been accepted into the marketplace. It's not the first time they're ever delivering the goods, because many times the goods have to be tweaked a bit before they're acceptable as a consumer product.
We are a unique private equity firm in that we invest in companies that we actually operate as hands-on operators. The particular focus that we have is in the industrial precision materials arena. This is part of the smokestack industry that was supposed to have gone away in the 90s. In point of fact, it is thriving. There are a lot of opportunity for shops that had become shuttered and were not keeping up with the trends in the marketplace that gave us marvelous buying opportunities to drive our business model through these companies. Typically, the companies that we are buying, however, have long history of losses, and they're very difficult to finance. As a matter of fact, we went through 55 different interviews with banks and 44 venture companies before we found Joe's group, who immediately caught on to what our model was and what we were buying. We have now the ability, through Capstone's help, driving value through these companies.
We have more contacts and more experience typically than our clients do in their specific area of expertise. They may be an expert in steel, they may be an expert in environmental remediation or apparel, but we have contacts all over the world that can make them more efficient, that can reduce their cost of goods sold. And when we do that, we reduce our risk because we know that the goods are going to be delivered on time, so the order won't be canceled. When we help them find a lower cost manufacturer with high quality, we're reducing our risk further by reducing the amount of money we have exposed at any one time in the given transaction, and they're operating more profitably because their gross margin has increased.
We're manufacturers of rainwear and outerwear and sportswear. We've been around for 37 years. In the first 30 years, our business was going great. In the last 7 years, our business really went down the tubes. Why was it going down the tubes? Because we couldn't get financing. And until we met up with Capstone, we were out shopping with all the banks, all these finance companies, and we couldn't get nobody to support us, nobody to finance us. Capstone came along last July and really financed us on the PO funding, on receivables, and anything else that we need. So they've been very good to us and kept our company going and growing, and we're growing the company now. That's a big difference.
They absolutely were the most flexible. They were very, very fast. It was a very complicated deal. We were able to structure it so that we preserved our net operating loss. We're able to structure it so that they purchased our Citi Corp loan that we were in trouble with, and we continue to use that as part of our strategy going forward for preserving our operating loss and having a lot of debt forgiveness. We couldn't have done this deal and saved the company without Capstone.
Capstone's sitting there saying, how fast can you grow this company? What can we do to speed up this process in a constructive way? We're not interested in taking, monumental risk or doing anything without a great deal of forethought and planning. But we want to see our clients grow. And I think some of the clients you may have talked to today have indicated that our relationship results in that.
Thanks to Capstone, I'm able to smile a little bit more every day.
It's a win-win situation. And many times it's hard to convey these positive benefits to clients when they're shopping around looking for money, because they're looking at an interest rate and they're not looking at the intangible benefits of working with a merchant bank like us.
The interesting story of Capstone Business Credit, which for over 15 years has been coming to the financial assistance of companies all over the world. I'm Doug Llewellyn reporting from New York.